Hey everybody, this is Mike McCleary, and on behalf of Marine Money and this stunningly great group of panelists, it's a pleasure to welcome you to the third of 3 webinars we're hosting today that comprise the second day of our New York Ship Finance Forum in the virtual style. Today's focus is offshore wind, and we're happy to conclude the discussion with our panel on financing the assets needed for offshore wind development and operation. Just so the audience knows, your microphones have been muted to optimize the quality of the audio for everybody. And there's a little box, a little orange arrow. John Chia is demonstrating that with a graphic right now, where you can ask questions that in the text box that we will pose to the panelists after their panel discussion concludes. So please ask questions anytime and we'll gather them up. Now I'd like to introduce Truls Trøan, who is the head of investment banking at Clarksons Platou Securities and will be the moderator for this panel. He was the moderator for the last panel too, so if you were there, excuse the repeat introduction. Truls and Clarksons have been extremely active in offshore wind, and some recent deals he's worked on include OHT's $60 million US dollar IPO and Will Wilhelmsen Holdings investment in Østensjø Offshore Wind's SOV and CSOV fleet of 6 vessels, both of whom were on the last panel. So this is all tying together terrifically. Truls, I'm going to hand it over to you, and I'll see you on the other end when we ask the audience questions of the panelists. Thank you.
Thank you very much, Mike, and for the second time today, thank you to Marine Money for organizing this great event. And again, we have a very solid and relevant panel of people who represent different sources of capital, a very good representation of capital financing, what we're seeing happening in offshore wind today, ranging from private equity, private debt, bank debt, capital markets, and also American shipping, which is an interesting part of the equation here as well. So I think it's helpful that we run through the panel very quickly, just to get some very quick introductions as to who you are and your current exposure and position in the industry. I know you like the attention, Erik, but you already had the welcoming remarks today, so I'll hand it over to Jolene. If you can start, please.
Sure. Thank you. Thanks, Truls. Hello. Good day, everyone from Singapore. It is very nice to be here today with everyone, and many thanks to Marine Money for having me here. My name is Jolene Chu, and I head up the deal origination efforts of Clifford Capital in the offshore and shipping space. Just a few words about Clifford Capital. We are a Singapore-based specialist provider of debt financing solutions, senior debt predominantly, although we have a small bucket for non-senior debt, with a policy mandate to boost exports and overseas investments from Singapore in the maritime and infrastructure sectors. We have a global footprint, so we would be pleased to speak to anyone who places orders from or has a footprint in Singapore. The offshore wind sector is one that we are obviously looking at very closely, since the assets needed could be built by manufacturers from Singapore. And we're keen to see if there's any role we can play to support exports on that front. So I look forward to hearing more insights from my fellow panelists today.
Matthew, can I turn to you?
Hi, my name is Phil Pacey. I'm a principal with AMP Capital in the Global Infrastructure Fund. I'm actually the asset manager for SFAR, which is our offshore wind support business based in Denmark. We're co-shareholders there with 3i. And that business now we're looking to expand globally and especially into the US market should the offshore wind approvals for the environmental studies come through. So very, very happy to be with you here today. Thank you.
Matthew, can you hear me?
I can. Thanks, Truls. My name is Matthew Havens, and I work at KfW IPEX-Bank, covering transportation out of our New York office for the last 6.5 years. KfW IPEX has an extensive history, really financing renewable and maritime, and we financed some of the first offshore wind projects, really following some of the German suppliers that were the initial, I guess, backbone of the industry. But IPEX looks forward to financing the growth of this industry for years to come, and appreciate having us on the panel today.
Great, and then Paul, hear from you.
Thank you, Truls, and thank you, Marine Money. My name is Paul Magnussen. I'm the CEO of American Shipping Company, an Oslo-listed Jones Act compliant leasing company. So we're very excited about the opportunities we think in the future for Jones Act tonnage into the U.S. offshore wind market. And today we have a fleet of 10 MR product tankers, and we're definitely hoping to expand our fleet into the offshore wind space going forward.
Great, and Erik, as most know, you are the CEO of Clarksons Platou Securities, and representing, I guess, capital markets, both equity and advisory firms. I think I'll start with you, Phil. You are a significant player within private equity, and one of your portfolio companies is a very interesting one, ESVAGT. And ESVAGT has been transformed under your ownership and management from oil services to offshore wind. And now I think you are considered the leading player, ESVAGT that is, within the walk to work or accommodation vessel part of offshore wind services. Can you explain a little bit, what you saw happening back when you started, building dedicated offshore wind vessels? What were the considerations, and how were you able to be, a first mover in such a active way? And what are the differences you see today from 5-10 years back when you made that decision?
Thanks, Truls. Well, we invest in infrastructure. We're an infrastructure fund, and the tagline normally is in assets that are essential to urban living. Now, that might sound a stretch then to talk about offshore wind vessels in the North Sea, but of course, as things are moving on, it's becoming clearer that renewable energy is indeed going to be essential to urban living. So we mentally made that leap in deciding to invest in ESVAGT. ESVAGT has a long history in excellent seafarer ship on the ocean, and it learnt its trade in the oil and gas support industry, providing safety at sea, providing environmental protection in terms of oil spills, in terms of putting out fires, and those excellent skills of seamanship and also of vessel management migrate easily across into offshore wind vessels. And of course, that repositioning of the business from fossil fuel to renewables is something that's now happening with many companies around the world as the future trends become clear. So we're very proud that we were a first mover and that we've got a substantial market share of this niche in the North Sea. And of course, one of the reasons why we've invested in, we're looking for businesses to grow, and there is now a tremendous growth opportunity in the US and in Asia as hopefully offshore wind really does go global. And I'm sure everyone on the call today is looking to that opportunity, and ESVAGT now is particularly well placed, having learnt its business in the North Sea. So I hope, Truls, that answers the numerous questions that you asked me to answer in that little cameo. Thank you.
Certainly, thank you very much. That's helpful. I'll talk to you, Matthew. Watching this, major development happening within, relatively kind of new industry. How would you describe, the flow of requests, clients, projects that require financing in the offshore wind sector, and what criteria do you set for getting, involved?
I think recently there's been a steady flow of projects over the last year, and more recently we're seeing an uptick in opportunities, especially coming from Asia and U.S. clients. Some of these clients are new entrants to the space, and in other cases we see clients who were previously in offshore oil and gas or more traditional markets shifting to offshore wind. We expect the pipeline of new projects to really be commensurate with the development of new wind farms. And we're optimistic that we'll continue to see some growth, continue to see a lot of new projects here over the foreseeable future. As in terms of criteria, there isn't a set criteria per se. I think we look to back projects led by strong developers with proven track records of success. But we're working with each client to help them achieve their objectives and priorities. But especially in this space, we're talking about SOVs and the like. We're looking for, we'd like to see long-term employment, committed backlogs.
And Jolene, how does that compare to you and your capital? Where do you fit in next to other sources of debt? What are you looking for, and how can you compete with the other sources?
Well, Truls, similarly to what Matthew has been sharing, I mean, we do see an uptick in opportunity, specifically for Clifford Capital, where our mandate is meant to only support exports from Singapore or overseas investment by our companies. We would only consider the financing of projects with orders placed with equipment suppliers providing goods to the offshore wind sector. Based on the heightened interest in the sector, it's fair to say that we would be in various stages of discussions with clients looking to place orders here. Is there a roaring pace of projects right now? I would say that it's pretty measured, as the new projects requiring financing are still limited to the known orders that have already been placed. Now, on that front, I would expect there to already be multiple parallel discussions going on, since there is an order book of more than a handful of assets where capex is considered high compared to the merchant shipping fleet. In terms of criteria of what we look at, the basic tenets still apply, being that, does this company, is it an existing operator, or is this a new setup which has managed to form a good operational team with relevant experience in the offshore wind sector? But we're talking in tendering activity, foundation installation, turbine installation, or even just heavy lift transportation experience. Installation of offshore wind turbines is incredibly complex. It involves logistics, planning, installation, transportation, etc. So it's extremely important that the service provider in this case has the necessary organization in place to be able to handle such complex operations. Cash flows, Matthew also mentioned this, it's got to support the debt. Is this a speculative build predicated on known demand? If there's a good team existing which has already staked out the demand in certain markets, we could potentially take a view on the company's chances of successfully winning sufficient contracts to support the debt service. And lastly, quality of assets. How is this adequately designed for the markets it is intended to work in? Is there flexibility for it to maximize utilization in different parts of the world, time of the year, etc.? Was the asset ordered at a price that is commensurate with the specs of the unit? Is it really worth every dollar that's being charged for? So these are some of the factors that we will be looking at when potential projects come to us.
Thank you, Jolene. Erik, I'll talk to you from a capital markets perspective on the other hand, and let's focus on equity first. How do you describe, the capital market sentiment for offshore wind right now, being such a young industry, and need for, investor education, and really understanding, how the dynamics of the industry works, and the development is taking place and associated risks?
Sure. Good morning, everyone, and thanks for the question, Truls. I would describe it obviously as very healthy. First of all, the general interest, for offshore wind, given the green wave that we've seen, across Europe, particularly since summer, it's been a bit of a Klondike nearly sentiment in capital markets, particularly or especially in Oslo. Investors have been chasing predominantly scalable green technology companies or projects. But, offshore winds obviously clearly falls into this whole energy transition, and ESG financing opportunity. And there's very limited public opportunities, in the space. You could probably argue that less than 10% of the, let's call it, current asset base or vessel asset base is available, to public markets. And consequently, because of the ESG label, the potential investor base, or rather available capital, is much bigger than your more traditional, maritime sectors. As there is, as we all know, a tremendous amount of capital that is flowing in, towards green investments. I would say that maybe there are three key elements that are very supportive for offshore wind, and that is, number one is the size of the market opportunity. As I said this morning, it's a market that's looking to grow, 8 to 10x in capacity the next 10 years. The expected returns, consequently, are also, higher, which is always very interesting for investors, to get a good return on their investment. Maybe you could argue as well that, the barriers to entry, if you like, are a bit higher, given that, pre-qualification by the developers, to bid in contracts, and the pure, size of the initial investments. At least if you look at, the VTIV vessels, it comes with a label of, $260 to $290 million. So it's a pretty big ticket. But what's interesting is, this is a cycle which is coming, and I guess that's the point of this event, is, to help educate everyone that, and be aware that this is around the corner and is coming. And I think that it's really interesting to see that those that smell a cycle, at least historically, are moving in, like Arne Blystad in OHT, like, Somen Power, BW, into Swire's wind business, Wilhelmsen, into Ørsted's offshore wind business, and the Scorpio Group, in their endeavor to transform Scorpio Bulkers into a, wind turbine installation vessel company. So, looks very interesting, and again, create big market opportunity.
So Phil, if there's a Klondike out there, as Erik describes it, why don't you list your company on the stock exchange now? Are you expecting an even hotter market in 2 years from now, or what's taking so long?
Yes, thank you, Truls, for that. Yes. Yes, I think, as I said earlier, we've got a tremendous growth prospect here with SFART in front of us, and this is a business that really can get into the scale and the numbers that Erik was just talking about in terms of investor opportunity. And it's quite a tough choice, given that scale, as to whether we look to a fund or indeed a corporate that really wants to take a market leader in the sector. Again, as Erik said, they're quite scarce to find as an opportunity to put capital in. Is that the best route for us to ultimately exit the business, or do we go to a public market and in effect spread the investment opportunity to a wider base? given that opportunity to grow and that ability for scale, and of course, given that selling to another fund or an investor or a corporate gives us a clean exit, I'm sure that would be our preferred route. But we are seriously looking at the public markets because it is an option that's very worthy of consideration, I have to say.
Right. So that leads me into a theme that I think a lot of people are asking themselves, namely, what is the relative returns or cost of capital in offshore wind services versus oil services, and until ESVAGT is in both, more or less 50-50. So is that making an exit more difficult because you need to balance whatever difference there is? Do you have a view on the different returns that are required?
I think there's a different dynamic here, and of course returns are all about risk and reward, as we all know. There's a different dynamic here when we're talking about offshore wind investment and vessels, because the vessel is quite often bespoke to the wind farm or wind farms that it's servicing. Each one has different conditions in terms of wind and wave height. Every one of them has different numbers of actual turbines to service. Obviously, the operators are moving more and more to having multi-wind farms close together that can be serviced from the same vessels. The contract lengths are different. The client expectations are different. But what is even more important, I think, in the offshore wind vessel support game is that the vessel and its performance are absolutely critical to the uptime of the wind farm. Now, we're achieving in the North Sea in the high 90s of uptime on the wind farm for our clients. And as you know, every percentage of uptime is worth a lot of money to the wind farm operator. So a lot of these vessels are bespoke. They're very expensive. They have a 30-year life. And therefore, the risk and reward understanding is quite a complex one in terms of both its operation and ultimately its residual risk. So these are assets that do have risk attached to them, that do demand a good reward. Infrastructure funds, as everyone knows, typically are in the range perhaps 8 to 14% IRR, depending on the risk and reward of the asset and the portfolio. Truls, I hope that gives your listener a flavour of our view of the answer to your question.
Yeah, that's helpful. Now, actually, I'll ask Matthew and Jolene the same. You are providing this capital, and you need to price it. How do you price your capital, depending on whether it's being exposed in offshore wind versus oil services, everything else being the same, if that's a fair question?
I think, Truls, it's even more complicated than that, right? It's not just offshore wind versus offshore oil services, right? It's across, allocating capital across the whole bank, and then also through through what is sustainable finance. So it's complicated, and as Phil just mentioned, and we all just saw over the last 5-6 years through a cycle of offshore oil and gas, there is a lot of risk. And we need to be compensated for that risk. And with specialized assets, it can be great terms and conditions, but if they're not working, it doesn't suit anyone well.
Jolene, I understand it's difficult to compare. Wind turbine installation jackup, construction cost, 200 million, oil and gas, drilling, jackup, same construction cost. If you had the ability and mandate to do both, what would be the difference in terms?
I think structurally, well, for a start, I believe that the focus is very much on cleaner energy these days. So definitely the preference would be to go for the renewables project versus a traditional oil and gas asset. Having said that, you've rightly mentioned, you know, in terms of an oil and gas drilling asset, a jackup versus a WTIV capex, they're both pretty similar. They are, in this day and age, based on the state of the oil and gas market, we are also looking at next to no long-term contracts, short-term, lumpy ones, well-based, integrated, well-based services contracts in the drilling space, and also pretty similar kind of a nature of contracts in the offshore wind space. So in terms of the risk, they are different risks, but I wouldn't say that they are actually very they're quite similar, I would have to say. Structurally, we would be looking at probably, you know, shorter, more sculpted repayment profiles based on the contracts or the backlog that the asset has already built up for itself. We know that in the WTIV space, contracts are lumpier. It depends on weather windows, and contracts are also awarded 1 to 2 seasons ahead based on the lineup of jobs within the same geographical space. So it's going to be a lot more bespoke in terms of the structuring of those loans, so that we can sculpt it down based on when there is employment, and then you can have some kind of step up or step down mechanism depending on employment. So shorter, I would see, to be honest, I would much prefer lower levels of debt so that these assets are more equitized, and the debt service burden on the asset is not as high as what we've seen previously in the oil and gas space. So higher equity, shorter loan tenors and profiles for a start. Obviously, this seems like a very cookie cutter reply, and it really depends and varies as every project is different. But for a start, this is where we would look at, and then we can start to, you know, make it as bespoke as we want it, depending on the project.
Right. Thank you. Thank you. Paul, I'll move to you. What is American corporations' ambitions within offshore wind, and what circumstances can you and your model be competitive to other sources of capital?
Yeah, I think as a Jones Act qualified leasing company, we definitely focus more on the US market than the rest of the world, although we do look at international projects too. I think within the Jones Act, we have the ability to invest equity, take residual risk, and be able to provide or offer shorter contracts, I think, than the typical, call it 15-year contract that some of the operators, I think, in the Jones Act would require to be able to finance. I mean, Jones Act is a call it relatively small market if you compare it to the rest of the world. You know, a lot of the operators are, you know, privately owned, family owned, relatively small businesses, and in some circumstances have limited access to capital. So I think the fact that we are publicly listed, have access to capital, you know, we borrow money from bond investors, we have good access to bank debt capital, should make us an attractive financial partner to some of the shipping operators in the US. So, you know, we have access to the same debt that, call it, anybody else. I think we have equity to invest, probably more than the average, call it, operator in the US. So it's more to, call it, the structure, being able to invest money, take on risk, and offer shorter contracts, which I think is the main, call it, competitive advantage that we may have compared to others.
Right. Given the this is to you, Erik. Given the young industry that really is, and all the new considerations and context. What is needed in terms of educating investors in order to invest significant capital in this industry? Do you feel that people really understand these businesses, or is it more a result of a need to allocate capital into this industry and everybody's running to the few available cases that are there?
Good question. I think I would say first of all, it's I don't know whether I should describe it as building a new industry, if you like, because obviously it's not a new industry, but obviously in capital market perspective it definitely is. So it's a timing issue. I think that in Europe has been much more opportunistic and maybe more aggressive in embracing this new ESG theme in terms of investing into it than the US, and I'm very confident that will definitely come in the US as well, as we are seeing. But as you say, I think it's obviously our job to describe the opportunity for the investor base, and it's something that takes a bit of a time to get across. But ultimately, as I pointed out, it's a tremendous opportunity. The market opportunity is, some say 20, some say $25 billion. If you look at the vessel asset size, vessel asset, let's call it, segment in itself. And it always takes a bit to be the first mover. No one really wants to be the first mover, but as I also mentioned, you've seen some of those very savvy traditional shipping investors do that, and smelling the cycle and moving in. So again, I think this is a great event to start this educational process. And obviously, when you're talking about businesses that in some instances are targeting deliveries a few years ahead and not immediate returns, they're obviously a bit more challenging. But I'm sure there's going to be plenty of news flow in this industry as the businesses grow. To find enough levers to find it attractive for capital markets. So it's small steps, but I think today, as an example, is a great start in that direction.
Yeah, I agree, and my feeling is that when we are presenting opportunities or discussing with investors opportunities in the offshore wind space, there's a lot of interest, potential interest, but at the end it seems like given the lack of history and maybe knowledge so far, at the end everybody wants 10 or 15-year contracts, and as we all know, there are very few assets in this industry that offer long-term contracts. It's probably only the SOV segment, Phil, where you are a market leader, where I guess investors in general are presented with maybe 12% return on equity, depending on the situation, obviously. So if you want more than that, Phil, how do you take the next step? How do you develop your portfolio or your service in order to take that step to 15-20%, which frankly is what everybody wants?
Yeah, I mean, it's a challenging question, Truls, isn't it? I mean, obviously the different vessel types have their different dynamics, and I think Jolene was talking about, walk-to-work vessels. They are much shorter contract, much more at risk in the market, and very high capital, and therefore quite rightly can attract much higher returns. And of course, if you get good utilization of one of those vessels, then of course you can easily make 20% plus returns. If you have the comfort of a longer term contract, as we do on the SOVs, and therefore are prepared to take better utilization and lower residual risk, then of course you're going to attract, or the market will demand, lower returns in that scenario. So I think there are a number of factors at play here. We've also got the issue of changing technologies. I mean, I think for some time people have been saying that support for wind farms is open to new technologies. Of course it is, but actually at the moment the tried and tested designs that have been available and utilized in the North Sea seem to be the ones that the US and Asia are actually embracing in terms of vessels. So yeah, I think there's a number of factors at play. It comes back to demand and supply. It comes back to how competitive the market is. A lot of marine players are very, very keen to get into supporting offshore wind and away from oil and gas, not surprisingly. And there's a competitive tension therefore at the moment in winning contracts in the market. And that's unavoidable in our view.
Right, thank you. Thank you. Listen, I think we are running out of time. Mike, again, I took too much time, so I'm very sorry about that. But hopefully your inbox is full of more intelligent questions than I were able to come up with.
My box is full, Truls. Thank you.
Great,
So
great.
I'm going to shoot around here, and I would say let's we'll just be concise on the answers as far as they go. So quick one to Erik Helberg. Are you seeing Series A equity rounds as this industry scales up?
Well, the answer is yes. I mean, just talking about the size of the asset base, it's not going to all come from debt financing. So that means, equity capital and risk equity capital initially, because as we discussed, some of these assets need to be financed without, long-term contract. So, so yes.
Okay, that's a yes. Tax credits and tax equity has been essential to supporting renewable energy industries like EV and solar. Is tax equity playing a role in offshore wind? Is the US going to offer tax incentives? Anybody that would take that, maybe, or pass?
Yeah, I would say no. I mean, for the shipping industry, that's not something that we are banking on for the future. I think it's going to be under the normal tax regime.
Okay, thanks, Paul. On a previous panel, the gentleman from Ørsted said that oil companies are moving in the U.S. offshore wind market. Is it the case in other parts of the world? Have oil companies played a role in funding? We'll just give that a few more seconds.
Well, I can just speak for Asia. We haven't seen much of that yet. Clearly, we've seen most of the activity in the West, but out in Asia, you just hear small rumblings. It's still the usual players: Ørsted, CIP, etc. So not so much activity from the oil majors.
Okay.
Yeah.
And in Europe,
I guess the answer is not yet, but obviously we've seen the oil majors, in investment arms, or let's call it, liquidity arms that have invested across different sectors previously. And I guess this being an important sector in terms of energy transition, I would assume that it will attract, some other liquidity capital.
Thank you. How much does the price of oil influence the profitability of this market?
Well, I can dare answer it in the sense that, it's obviously now an extremely attractive value proposition, and the power generated is now cheaper than both coal, and when we discuss carbon taxes, is even cheaper than gas fired plants. So at some point, all relevant peer, let's call it, energy sources are always very relevant, but it's now becoming so competitive that it competes with everything, I guess, or is competitive with everything, even the cheapest sources.
I'd like to add that I think the industry and all the observers to the industry in Europe have been amazed at how sharply operating costs in offshore wind have decreased as innovation and productivity has increased. I can tell you that the operators of the wind farms are still on that mission. They're still looking for continuous improvement, and they're also looking for the whole supply chain to be carbon emission minimal. So they're looking at the fuel that's being used in vessels. They're looking at the whole supply chain, because clearly the credentials of offshore wind are the future and the planet, and therefore the whole supply chain's got to buy in and contribute to that. So in my experience, the offshore wind developers and operators are very, very energetic in terms of efficiency and carbon neutrality.
I think it's a case where it's not so linked to necessarily oil and gas, but there are other factors behind it, right? Job creation, energy independence, or it's more linked to things like coal, as Erik had talked about.
Thank you. So this question is a financing panel without a quote unquote traditional commercial bank. Will the ship you can take that. Will the shipping banks step up?
We're a traditional commercial bank, I'd say, and will traditional banks step up? I believe that if the deals are deals are structured correctly, if we don't see if Erik doesn't do a very good job in bringing in equity that hasn't been burnt by other places in the offshore, then we will be able to play a significant role here. But in the end, capital is a commodity, and if cheap money comes in, then we will step aside and let other people take on the project.
I guess the outside, I would also say, oh, sorry, Erik. I would also say that, just the fact that offshore wind is a renewable sector, it fits with this whole clean energy lending, ESG, etc. I would say that the traditional shipping banks should be able to find ways to see how they can continue to lend to assets in this space, simply for the same reasons. It could be the way a bank treats the capital allocation, for example, but I'm very sure that many of them are keen to see how they can play a role.
No, indeed, and I if we are to draw some conclusion from at least experience so far, OHT as an example, were able to attract your traditional shipping financiers, into their project. So hopefully that's a good testament for what we can, await ourselves.
Does the continuously increasing size of turbines affect investments in offshore wind vessels?
Yes. I mean, clearly, the larger the turbine, the more important every single turbine is to be up and operational in a wind farm, because otherwise you're losing a percentage of your output. So I think the size of the turbines and the importance of each turbine makes the support and maintenance of each turbine more and more important, and that means that the supply chain behind it has got to be better and better for the wind farm operator to deliver their objectives. So I think it's changing the dynamic of the level of support and the excellence required right through the supply chain, including support vessels.
And last question, Paul, could you describe a sort of wind-enabled American shipping company? Does it look like the current version? Is it multiple asset types? Are you buying vessels? Is it leasing, or what does that sort of look like for the audience?
No, so our business model is to own ships and lease them out to a Jones Act qualified operator, and would be the base model going forward in the offshore wind industry as well. And I think particularly when it comes to the U.S., construction financing is extremely hard to find. So I think having somebody like us in the mix together with the shipping companies can definitely strengthen the, call it, credit profile of the ownership. So I think there should be room for the only leasing company within the Jones Act, I think, in the offshore wind industry in the U.S. going forward.
Thank you. Well, we asked all the questions. The audience must be satisfied with that their voices were heard and that everyone had a chance to respond. So I want to thank all of you so much, our panel, for the time and effort that you put into this. Thanks to our attendees. Know that, again, we'll send a replay of this webinar to you by tomorrow. We want to thank the sponsors for their support and leadership. Without them, the program would not have taken place at all. For day one, that was Rose & Co. as the partner. For today, Clarksons, Platou, Securities as the partner of Offshore Wind. Prime sponsors, Advantage Tankers, KfW, IPEX-Bank, Macquarie, Ridgeberry Tankers, Stiefel, and our corporate sponsors, American Shipping Company, Australis Maritime, Clifford Capital, D'Amico Tankers, Eagle Bulk, Genco, Jones Walker, Navigate, Nikki, Scorpio Bulkers, Star Bulk, Torm, and Winston & Strong. You can see it's a huge team effort. And together, I think we can get an incredible amount of things accomplished. So this concludes our 21st annual, call it New York Ship Finance Forum, the virtual version. For us, yesterday was bulkers, tankers, and credit, more traditional subjects. This is the first time that we've ever done offshore wind. I'm sure it's not going to be the last time. I think it's just we're gonna do that more and more. In the meantime, we say the sun never sets on marine money. So please keep on the lookout for upcoming forums. We have our Gulf Ship Finance Forum that will be held virtually on November 25th. You can sign up for that on the website. Look for analysis, look for insight from us, and if we can be of any help in connecting you with other members of this community, just let us know. Thank you all, and thanks, and see you soon. Goodbye, everyone.
Thank you.
Right. Thank you.
Thank you.